And I'm going to introduce our first speaker, who is Jesse Crawford, and he's who we call the face of our agency here at NJHMFA.
Thank you, Cindy, and thank you all for coming out tonight. Again, my name is Jesse Crawford. I'm the Housing Outreach and Marketing Coordinator for the New Jersey Housing Mortgage Finance Agency, and I have a host of information to share with you today. So without further ado, I'm going to share my screen and start the presentation. Okay, here we go, and let me do full screen. Again, we are the New Jersey Housing Mortgage Finance Agency, and today I want to talk to you about maximizing first-time homebuyer opportunities with down payment assistance. A little bit about us. The New Jersey Housing Mortgage Finance Agency provides funding for affordable home ownership and housing opportunities to New Jersey residents. We are a state housing finance agency, and we respond to the needs of the residents here in New Jersey by creating and implementing programs that establish alliances that fund affordable home mortgages for first-time home buyers, down payment assistance programs, and other programs that help homeowners and renters throughout the state. And we also do most of this through a network of approved lenders that we work with. And I'll talk more about that a little bit later. Some statistics. First-time home buyers, according to the National Association of Realtors, make up 33% of all home buyers. The largest share of this continues to be the age group between 25 to 34, which accounts for 54% of all home buyers. And according to the National Association of Realtors, also 71% of all first-time home buyers were previously renting an apartment or a house. Now, there are leading barriers why folks aren't able to purchase a home, or they're reluctant to purchase a home. And some of them are just not having the down payment and closing cost funds that come with purchasing a home. Others might be just qualifying for a mortgage, understanding how that whole process works. Some things that hinder folks is the amount of debt that they're currently carrying. Job security is another issue. And, you know, in some cases, when you receive funding for certain grants and down payment assistance programs, you're required to settle down in a specific area where you purchase your home for a period of time. And in some cases, you're not able to do that because of your current working situation. And lastly, something that's going on all around the country is there's not enough homes for sale. Basically, not enough inventory on the market right now. So that's another issue. But according to this particular graph, affording the down payment, 68% said that was a major barrier for them. Qualifying for the mortgage at 53%, the amount of debt currently carrying at 50%, and job security rounds in at 39%. Now here's a snapshot of expenses that prevent folks from being able to save money for down payment to buy a home. 56% of first-time home buyers said their student loan debt was a major obstacle for them to be able to save money for down payment. Credit card debt came in at 34%, car loans, 36%, child care expenses, healthcare costs, and others. Now, middle-income renters indicated that they have the same challenge. Nearly 9 in 10 low-income renters said that having money for down payment and closing costs was a major obstacle to home ownership for them. Okay, and 62% of low-income had the same issue. 39% of middle-income renters considered having funds as a major obstacle to home ownership. And the reason why I'm going through these statistics is to let you know that these are what the stumbling blocks are and the barriers are, and we have a solution for you if you qualify to get over these barriers and hurdles. Now, quickly, I want to talk about our mortgage program. We have two foundational mortgage programs. We have our first-time home buyer mortgage, and we have our homeward bound mortgage program. Both of these mortgages are 30-year fixed government insured mortgages, okay? And they're for first-time home buyers who purchase a home here in New Jersey to be their primary residence for 5 years, okay? And the interest rates for our mortgages are determined by our agency and not our lenders. I want to repeat that. We determine what the interest rate is going to be, not the lenders. We do have an approved lender list, but the lender does not dictate the rate. The lender does not change the rate. Our rates are sent out to each and every one of our lenders by 10 a.m. each and every business day. Now, our first-time home buyer program is, I want to talk to you a bit about the requirements. You must be a borrower purchasing and occupying a residential home in the state of New Jersey. You must qualify and meet all the requirements for our first mortgage, which is originated through one of our participating lenders. And I'll give you the information on the participating lender list and how to contact one of our lenders. Borrowers must be a first-time home buyer. Now, a first-time home buyer, as defined as someone who has not had ownership interest in their primary residence during the previous 3 years. Now, qualified veterans do not need to be first-time home buyers, but they must not or cannot own another primary residence at the time of closing on their new home under our programs. The minimum credit score for our first-time home buyer mortgage is 620 or greater, and the debt-to-income ratios are 40 and 47. The max ratio 40 and 47 for the first-time home buyer mortgage. Borrowers are required to have 2 months of monthly reserve the anticipated monthly mortgage payment, and I'll talk about that a little more in detail on another slide. And there are income limits that must be met by the borrower. Now, income limits are for each and every adult household member 18 and older who are not full-time students. So all the income in the household is calculated for all adults working who aren't full-time students, even though they may not be on the mortgage. Entire household income is calculated. And I'm going to share my screen again with a different PowerPoint here, a PDF, to show you what the income limit for Salem. 1 to 2 family household, maximum income limit is $103,300. 3+ family household, the maximum income for Salem County is $118,795. And lastly, on this particular slide, borrowers may not possess enough liquid assets to close the mortgage loan at 80% loan to value or less. Simply meaning, if you have more than 20% to put down on this home that you're looking to purchase, then in essence, you do not need our low interest rate mortgage with our down payment assistance. Now, our homeward bound mortgage, very similar to the first time home buyer mortgage, but there's some distinct differences. Now, again, borrower must purchase and occupy a residential home in the state of New Jersey. The borrower must qualify for a mortgage using one of our approved or participating lenders. The borrower must be a first-time home buyer, defined as someone who has not had ownership interest in their primary residence during the previous 3 years. Qualified veterans do not need to be first-time home buyers, but the homeward bound, it allots for higher income ratios compared to the first-time home buyer. Again, it's a 30-year fixed rate mortgage. So on the next slide here, minimum credit score is 620 or higher, just like the first-time home buyer. But as you can see, The debt to income ratio here is 40 and 50, whereas for the first-time home buyer, it was 40 and 47. Now, basically, if you don't qualify for the first-time home buyer mortgage because your debt to income ratio is too high, then you can possibly qualify for the homeward bound mortgage, which allows for higher debt to income ratios. Also, as required with the first-time home buyer, 2 months monthly reserves of the monthly mortgage payment is required, and there are income limits for the homeward bound, and I'm going to bring them up. And as you can see here, for Salem County, $144,620 is the maximum household income to qualify for this mortgage through the homeward bound mortgage. So it's vastly larger than the first-time home buyer. So again, the scenario is that you may qualify for the first-time home buyer, and your debt to income ratios are fine, but your income is too high as a household. So then the lender would then try and qualify you for the homeward bound mortgage, which allots for higher income limits than the first-time home buyer. And as I said before, may not possess enough liquid assets to close the mortgage at 80% loan to value or less. Now, I want to talk about urban targeted areas for a minute. And this is specifically for anyone who may be a current homeowner, not a first-time home buyer, but a current homeowner, and they're seeking to buy a new home, and they need down payment assistance and a low interest rate mortgage. Urban targeted areas are designated by the Department of Housing and Urban Development, and each and every county has designated urban targeted areas. Now, buyers of homes located within the urban targeted areas or qualified veterans do not need to be first-time home buyers, but must not own another primary residence at closing. I want to repeat that. Buyers of homes located within urban targeted areas do not need to be first-time home buyers, but must not own another primary residence at closing. So the scenario would be they would qualify for a mortgage, buying a home in the urban targeted area, and they would have to sell their current home prior to closing on their new home. And the benefits of buying a home in an urban targeted area are higher income limits are permitted for qualifying, and higher housing purchase prices are permitted. Now, the link on this page, I'm going to go to this link, but I also want to let everyone know that every link that I have in my presentation is going to be added to the chat function and going to be emailed out to you all tomorrow, so you can copy these links, save these links on your desktop, and go back and review them at your leisure. But I want to show you this screen here. This is called our Site Evaluator. And this is a tool that you can use to determine whether or not the home that you're looking to purchase is in an urban targeted area. Basically, all you need to do is put in the address of the potential home that you're looking to buy, and it will return the values here over to the left and let you know whether or not it is indeed in an urban targeted area tract. If it is, then you can proceed with putting an offer in and working towards getting your firm approval with one of the lenders. And as a person who already owns a home, you can utilize our low interest rate mortgage with our down payment assistance. Now, urban targeted areas are an untapped market because buyers can purchase in these areas. And again, they do not need to be first-time home buyers to use our mortgage program and our down payment assistance program. Our down payment assistance, I haven't talked about purposely because that's the last part of my presentation. But I'm going to show you the income limits for the urban targeted areas. And again, here at the top, Salem County, 1 to 2 family household. The maximum is $123,960,000, and for 3+ house in the household, $144,620. We have some additional resources here on this page, downpaymentresources.com. It's not a site that we manage or own, but it's a great resource for folks who are looking for additional down payment resources to couple with our down payment funds that we provide. You can simply go to the link, put in your information, the criteria, what you're looking for, the area, and see what other grants and down payment assistance programs may be available that you can couple with our down payment assistance. Also, we've included in this presentation, if you have not pulled your credit report and you need a copy of your credit report, you can get 1 free copy every year at annualcreditreport.com from each and every credit bureau, all 3 major credit bureaus, I should say. And so you take a look at your credit, understand what's going on. If there's any issues or anything that needs to be addressed, you can then follow up and make those corrections and address those concerns prior to applying for the mortgage. Now this screen here gives you a full snapshot of the differences between both programs. A lot of similarities, but some major differences. The first-time homebuyer program, as well as the Homeward Bound, minimum credit score is 620 or greater. The first-time homebuyer has lower income limits, whereas the Homeward Bound allots for higher income limits. And we talked about that earlier, because if you don't qualify for the first-time homebuyer because your income is too high, then you can possibly qualify for the Homeward Bound to address those higher income needs. The first-time homebuyer has lower debt-to-income ratios, whereas the Homeward Bound has higher debt-to-income ratios. They're both 30-year fixed government-insured mortgages, and the first-time homebuyer has a lower interest rate. Currently, the interest rate is 2.875, whereas the Homeward Bound is 3.25%. And for each and every borrower, you must complete a HUD-approved credit counseling course through a HUD-approved credit counseling agency. You can go to HUD.gov, or you can go to our website. We have a link that says find a housing counselor or housing counseling agency, and we have it listed by counties throughout the entire state, and you can select an agency close to you within your county. Also, upon completing the credit counseling course, you will receive a certification saying you've completed it. That certification expires in 1 year. A copy of that has to be submitted with your closing package to meet this requirement. It's something that's required for each and every file. So you can start the process before you actually try and qualify for a mortgage, or you can do it during the process. But at the end of the day, you have to have it completed with your closing package when it's submitted for review. And also, for both these programs, you can purchase up to a 4-unit property as long as you occupy one of the units as your primary residence for a 5-year period. So the scenario is you buy a 2-family, you live in one, you rent the other out, and you stay put for 5 years in that unit as your primary residence. Really quick, the required documents that you're going to have to gather for the loan officer to process your file. You're going to need 3 years signed federal tax returns or 3 years transcripts, 30-day pay stubs, and 2 years W-2s. You're going to need 2 months bank statements. You're going to need 2 months monthly reserves of the monthly mortgage payment. Now, reserves can be in a personal account. It can be a gift from friends or family member, or it can be provided by way of a statement of your 401k, your pension, or some other retirement program, but it does not need to be withdrawn. You just need to show that you have 2 months reserves available in case of a rainy day, so to speak, and it's required for all borrowers for this program. And in some cases, borrowers can get cash back at closing if there's an excess of funds, but the max you can get back at closing is $3,000 for things paid out of pocket, which include your earnest money deposit, your appraisal fee, your home inspection, your pest inspection, and your home buyer's course. Finally, once your file is submitted and it's ready to be reviewed for compliance and cleared to close, lenders will submit that file to us. And once they submit it, it could take up to 5 business days for us to clear the file. We don't typically use those 5 days. If everything is submitted, all the requirements are met, you can get your approval within hours or days. It typically takes 1 to 2 days on our end to clear the file for closing. And lenders are encouraged to submit the file to our agency 10 business days prior to closing on your loan, so we can then review it and allow for any resubmissions of any loan conditions. Now, this is the happy part of my presentation, our down payment assistance program. This is what I call our free money section of the webinar. We currently have $10,000 to give you towards your down payment and closing costs. Okay, it's a flat $10,000. It's not up to $10,000. It's a flat $10,000. And this down payment of $10,000 is what we call a forgivable loan. It's not a grant. It's a forgivable loan with no payments and no interest. And it's coupled or part of our sub-program, which is coupled with our first mortgage, which is provided through one of our participating lenders. And as I said earlier, all our loans are government-insured loans, such as VHA, VA, or USDA, okay? And currently, we do not offer any conventional lending, but I'm happy to say within the next few months, we will be providing conventional mortgages, which is a great thing. Now, the major requirement, should you receive the down payment assistance coupled with the mortgage, you are required to reside in the residence after closing for 5 years after purchase, without selling, without refinancing, and obviously without defaulting on the mortgage. If you adhere to those guidelines, that $10,000 is completely forgiven. Completely forgiven after 5 years. During that 5-year period, there are no payments. I say it again, there are no payments because it's a zero interest loan. So in my book, that's free money at the end of the day. Now, sadly, in the event that you receive the grant, I'm sorry, not the grant, the down payment assistance, and you decide that you would like to refinance or cease to occupy the premises before the 5-year period is up, the 5-year term is up, you are required to pay the DPA of $10,000 back. It will become payable back to the agency. The program is also available for new construction. We didn't always allow for this, but if you find a development that's going up, a new construction, and you want to get in on an opportunity, you can certainly utilize our down payment assistance and our low interest rate mortgage to purchase new construction. And it has to be your primary residence here in the state of New Jersey for 5 years. You can move in from any other state as long as you're moving here to stay as your primary residence for 5 years. Also, borrowers can receive seller concessions to be coupled with the down payment assistance, which gives you greater resources for your costs for your down payment and closing costs. You can couple it with any other down payment assistance resource that you may receive, as long as the requirements for that other entity will allow it. Again, you can couple down payment resources from county, from any other state programs that you might come across with our down payment assistance, as long as that other entity will allow it. And in some cases, you may not have to bring any money to closing at all. Little or no money out of your own pocket to close on your home. Eligible properties, again, must be located in the state of New Jersey, and it must be your primary residence for 5 years. Type of properties: single family home, condo, condominium, townhome, manufactured home, and even mobile homes. But the mobile home has to be on a fixed foundation. Cannot be a mobile home you can just wheel from town to town. Has to be on a fixed foundation. And as I said earlier, you can purchase up to a 4-family dwelling in which one of the units must be occupied by you, the borrower, as his or her primary residence for a full 5 years. Now, we have the link here for the HUD-approved counseling agency, which will be included in the chat, and also with an email sent to everyone on the Zoom call today. And you can simply go there to find a counseling agency in your area, or you can go to our agency website at njhousing.gov and click on the link for home buyers, and there's a link to find a counselor on that particular page. And just to wrap up, our agency is a solution for one of the leading reasons why consumers aren't able to purchase a home. Either they don't have the money for down payment or the closing costs, or qualifying for a mortgage. Some folks think they need 20% down. That's not the case. You only need 3.5%. And in this case, we're giving you $10,000. And for a home of $200,000, just to give you a rough number, you need $7,000 to bring to the table as your down payment. And we've actually given you that $7,000 plus $3,000 to be added towards your closing costs. So we are a solution to the major obstacle for some folks in our state being able to own a home. And we hope you will take advantage of this program. And I want to talk to you one more thing about this particular slide here. This is our Road Home New Jersey guide. It's an invaluable resource for you as someone starting the process, whether you bought a home before or not. And it takes you through step-by-step the process of buying a home, the cost of home ownership, how to find a housing counselor, getting pre-qualified. There's calculators in here, links for calculators, how to determine biweekly mortgage payments. It's a great resource for you to have. You can download this to your desktop and go through it at any time, step by step. And the great thing about this guide is at the end of this guide, there is a glossary of terms. So if you come across a term or hear a term during the process of your home buying journey, just look to the back of the glossary, look it up, and there's a full explanation of what that term is. It's a great resource, and I implore you to download it, leave it on your desktop or the link on your browser. Now, if you are a buyer who is interested in utilizing our program and you're ready to go, the minimum credit score is where it needs to be, you understand what's going on with your debt to income ratios and everything else, and you want to start today, all you have to do is click on this link here for our lender request form. And you can clearly go in here and put in your information to be paired with one of our participating lenders, and we will return up to 3 of our top lenders to you with your information and their information, and they will then work with you. You select which one you want to use, and they will work to get you pre-qualified and then get you qualified and get you a firm commitment. In the event that you would like to just go through our downloadable list of lenders, you can certainly do that. And click on the link, and here are all the lenders for our program, and you can simply reach out to one on this list to qualify for a mortgage. Everything goes through our lenders. Our lenders will pre-qualify you. They will then collect all your major documents that I spoke about earlier. They will then qualify you with the firm offer and commitment, and they will work to get your package to the closing table. If you are already pre-qualified by a lender and they're not on our approved lender list, and you want to take advantage of our down payment assistance of $10,000, you can simply have them reach out to us at sflenders@njhmfa.gov, and we can work with them to get them on our list and approved, and you, as the buyer, can then take advantage of our down payment assistance program. That concludes my presentation. Here's my information on the screen. Feel free to contact me with any questions or any concerns that you might have. Email is the best way to reach me, or you can call me at the number listed. And we're not in the office yet, but I will return your call. But again, email is the best way to reach me. And with that, I thank you for indulging me today. I'm going to stop sharing my screen. Feel free to ask any questions or put in the chat. I'm here to answer any questions you may have.
Thanks, Jesse. Ton of information. We do have some questions and that are in the chat, so I'll go through those. And then if anyone else has questions, you can feel free to unmute. Let's go through the chat. So are there any restrictions on participating in the program, such as previous enrollment? That's from Barbara.
Well, when you say previous enrollment, Barbara, you could unmute yourself if you want.
Okay. Hello.
The major requirement is that you are a first-time home buyer if you're purchasing outside of an urban targeted area. What do you mean? What do you mean by previous enrollment? Can you clarify?
I went through New Jersey Housing and Finance Mortgage Agency back in, I want to say, I think it was 2010. Okay. But I ended up losing my home in 2019, I believe it was, because it's coming up on 2 years, and I was told that the deed had to be out of my name for 2 years before I could buy again. So I wanted to know, would I be able to go through that program again, or once you fell through, are you no longer qualified to participate in their program?
No. The issue when it comes to foreclosure is once it's foreclosed, you have a period of time that you cannot buy a home. And once you've reached that period, and our attorney on this call will be able to answer that more in detail specifically. But the general sense is that you're not allowed to qualify for a mortgage for a period of time. It's just like bankruptcy. You file for bankruptcy, once it's discharged, Chapter 7, you have 2 years before you can qualify for a mortgage. There's a waiting period. So as long as you've gone through that waiting period, and depending on what's reporting on your credit and on title and some other things, this will determine whether you're able to actually move forward. But to answer your question, once those things are cleared, you can certainly apply to buy a home through this program.
Now, would it be considered a first-time home buyer? I'm sorry for cutting you off. Would it be considered a first-time home buyer again, like once that time has passed, or it wouldn't be?
Well, your home was foreclosed 2 years ago. You vacated the property when?
January of 2019, and I was told June 19th of 2021. The title had to be out of my name for 2 years. So next Friday will actually make the second year that it's been out of my name.
Hold on to this question, and we're going to let the attorney who's on answer this in detail for you, okay?
Okay, thanks.
All right.
Satalda, do you want to answer that now?
Hello.
Hi.
Hey, how are you, Cynthia, Jesse? Good evening.
Did you hear that last question? I was wondering if you'd want to address that. Do you need me to repeat it?
Can you repeat it? I heard the first part when Jesse said about 2 years waiting period, but I'm not sure what legal response is required. Can you just repeat that? And I'm happy to answer.
Sure. Jesse, if you want to go through that, 2019, right?
Barbara stated that she had a foreclosure back in 2019, okay?
Okay.
And her initial question was, can she apply for a mortgage through our agency because she was foreclosed? And I said to her, basically the question is that there's a waiting period after foreclosure before you can apply for a mortgage. And once that period is met, just like with Chapter 7, once it's discharged, you got to wait 2 years before you can apply for a mortgage again, from my understanding. I'm not the attorney. I only play one on the Zoom call. So I was wondering if you could address that for her.
But the question is what? The question is whether she can apply again after she foreclosed after 2 years? Is that the question?
Yes.
Yeah, it's like anything else. I mean, it's really not, to be truthful to you, it's really not a legal question. Usually what you said is correct. There's a waiting period. Just like if somebody were to file Chapter 7, I think you said, or 13, or bankruptcy, that sometimes it was a longer than a 2-year waiting period. But to be truthful, every lender has different underwriting views on that. It used to be 7 years, used to be 4, used to be 2. If you show 2 years of PSE&G bills, utility bills, and your payments, credits are all current, it's okay. But I'll be honest, every lender has a different view on it. So I could never have a blanket answer. But long as you wait the waiting period, it should be okay. So the job is to ask whichever lender you're working with to see what their requirements are, and especially what their underwriter requirements are. That's really the honest answer.
Right.
Okay.
Right.
There's no one answer fits all. There isn't any. And
the other thing, Barbara, they look at is that you've reestablished credit, and you kind of basically rehabilitated yourself over the past since the foreclosure. So they're
that's what they're that's what they're looking for.
Yes,
But
I'm currently. I'm sorry. Go ahead.
No, all I was going to say is, but you have to be very careful in that waiting period. You cannot like mess up the bills. Do you know what I mean?
Yeah.
They have to be paid on time because that's like your redemption period. And if you go past that and default again during that time, even once, even by 1 day, they're pretty unforgiving on it.
Okay. I did kind of redeem myself as far as the credit. I believe I'm at like a 653. Currently, I wanted to get my score a little higher, at least into the 700s before I actually apply for a mortgage. But I am over, I guess, the required number for credit.
Good job.
Yeah.
Thank you.
Great. Well, good
Thanks,
question.
Sital.
Thank you, Sital.
No problem. Oh, sure.
Sital,
I'm here. No problem.
Did you want me to go on with you before I hit Jesse's Q&As?
I can. I'm ready. Whatever you are. I'm okay. I can do it. Sure.
Okay, let's do that. So we're going to move on to do Sital's presentation. And then at the end, I'll get all of his Q&As. And I didn't forget about the chat Q&As for Jesse, so we will go back to them. So hang on. We're scheduled till 8:30, but if we need to go past, we're here. That's fine. So keep throwing in questions in the chat, or we can you can unmute when we're done and ask more questions then. So Sital Shah is with Shah Legal Law Firm, and I'm going to put his contact information in the chat now. So I'll hand it over to you now, Sital. Thanks for coming on.
Oh, thank you. Good evening, everybody. I'm Sital J. Shah in Edison, New Jersey, and thank you for having me speak. The most important thing to remember when you're signing a contract is not be nervous and know you have a 3 business day attorney review to review the contract with your attorney. That means 3 business days. Saturdays, Sundays, and holidays don't count. So if you're signing a contract on a Friday night, do not worry. Saturday, Sunday do not count. Monday would be the first day in attorney review. I like to call attorney review the agree to disagree period. In simple English, that means you sign a contract, seller signs a contract, you both discuss the contract with your attorney. Your attorney will make changes. Your attorney will make sure you understand what you signed. You will give feedback to your attorney. The sellers will do the same thing through their attorney. I like to call attorney review the agree to disagree period. That means if you agree to the changes of the seller agrees to some of your changes, you both will sign off. When you sign off, both of you, at that point, attorney review is concluded. That means it's a binding contract. That means you're the winner. The most important thing in today's market is a seller's market currently, and people are moving very fast. There are a lot of buyers fighting for the same house. Little bit of practical advice. If you like a house, you're tired of going every weekend and looking at 50 homes and not getting it, and you finally get the home of your dreams, and you want to be the winner, he or she that finishes attorney review wins the game. Simple. That means the faster you review the contract with your attorney, the faster you sign off on the changes, and the sellers do the same, it's yours. Until that happens, you're inviting the seller to receive another offer for more money and to take the home away from you. So the longer the attorney review period stays open, it's not in your favor. If you like the house, you should move quickly. I often get asked about a couple of basic things in a contract. How much money should I put down? Typically, you'll put $1,000 good faith deposit when you sign the contract. There's no textbook answer to this question. Sellers always want you to put more money down. Buyers always want you to put less. The second deposit generally will be 2, 3, 5, 10 days after attorney review. Okay. Now it could be 5% down, 8% down, 10% down. It's whatever is negotiated. There's no textbook answer. I often get asked, what appliances are included in the contract? The stove is the only legal appliance allowed that seller has to give to the buyer. There's no fundamental right to a dishwasher, microwave, washer, dryer, even though people think they deserve it. I would take 5 minutes to jot down the appliances. It's important. When somebody says washer, dryer, refrigerator is included, that does not mean the appliances that you saw when you signed the contract. It seems pretty funny. If you sign a contract and you see a nice new refrigerator that's expensive, your assumption would be that's the one they mean I'm getting. No. When they say included refrigerator, it can be any refrigerator. I've seen situations right before closing. The seller has changed the nice new Viking refrigerator to 1972 Grandma Special. That's the one you're getting, and that's a refrigerator. So if you see a new GE dishwasher, GE refrigerator, take 5 minutes to write GE washer, GE refrigerator. That's important. And if you find it's a newer model, like within 2 years, right? Within 2 years, it's better than getting a 10-year-old one. Home inspections, another area, very interesting topic. You'll typically conduct inspections within 14 days of attorney review. And you'll typically provide your attorney with a copy of the report and email them a list of repairs that you're thinking of requesting from the seller. The number one question I get asked most often, after I do home inspections and I change my mind, I don't like the house, I don't want to live in this town, can I cancel the contract? No. Home inspections are not based on your personal liking, feelings, or how your mood is that day. If you do the home inspections and there's a major repair, you have to give the seller an opportunity to fix the major repair before you cancel the contract. In other words, once you do home inspections, you can't just cancel the contract. The seller gets the opportunity to fix the repairs before you cancel the contract. Now, major repairs I had mentioned, it's not my definition of major repairs, nor is it yours. It's what the contract states. Contract will typically state major repairs affect heating, HVAC, mechanical systems, plumbing and sewer systems, mold, environmental, asbestos concerns. Basement should be intact, free of leaks. The roof should be structurally sound, free of leaks. Windows should be in working condition. These are considered major. If the sellers do not address major repairs, you can cancel the contract. Now, if you give a list of repairs, I guess you can ask for everything you want, but in reality, no one will ever generally do everything you want. The seller may offer you a repair, or they may offer you a credit for repair, or they may offer you a combination. Sometimes you want to take money because you'll control the situation after closing. You may feel more comfortable hiring a contractor you trust that will do the work professionally. Sometimes you don't want to do the repairs and you'll have the seller conduct them before closing. Now, how do you know you're being treated fairly on the repairs? Sometimes you can get an estimate. What if the seller offers you $75 towards a plumbing repair, but your estimate from a licensed contractor shows $700? Now you have some knowledge. If you're negotiating a credit, you get $500, $600, that's closer to $700, you can call it a day. At least you know you got a fair amount to cover the repairs. Now, if the sellers perform repairs other than a major repair, that's a Christmas gift. You say thank you. You cannot just demand that they do small repairs, and if they change their mind and don't want to do it, you cancel the contract. That's very important. They're only obligated to do the major repairs, all right? Now, after home inspections, you'll be working on your mortgage commitment. You typically have 4 weeks to get a mortgage commitment. The mortgage commitment says, I believe in you. The lender says, I reviewed your financials. I reviewed your pay stubs, your paperwork, and I am going to approve you of the loan. And on the day of the closing, show up with the money. That's what a mortgage commitment says. And you typically have 4 weeks. Your attorney will also review title work. You want to make sure there's no liens, lawsuits, or judgments on the property. This is not your responsibility. This is your attorney's responsibility. It only becomes your responsibility if you are hiring attorneys that do not perform real estate. They perform other areas of law, and they're doing you a favor by doing a closing for you. It's not a favor. There's a lot of detail in a real estate closing that many attorneys routinely miss, even experienced attorneys, to be honest. And you want to make sure title is clean. For example, I mean, the seller's mortgage and water bills have to be paid off because those are lienable on the house you're buying. Those are a little bit more obvious. Now, how do you really know the seller owns the property? Everybody takes it for granted the person signing the contract actually owns the property. It's human nature. I could sign it. I don't own anything. Title work will reveal who the true sellers are. So if only one seller signed and a seller is missing, you're alerted that you want to make sure the other seller conveys all their legal interest in the property. How many of you know out there that a seller who's behind on his child support is lienable on the property you're about to buy? Although that bill has nothing to do with you, we have to make sure the sellers pay their child support. In fact, the next 12 weeks of future payments are also due and lienable on the property you're about to buy. Your attorney is like your personal bodyguard. Their job is to make sure they work with all parties. Their job is to make sure you're being treated fairly and vetting everybody, asking the right questions and digging in and coordinating. It's a team-oriented approach. Your attorney has to have a temperament and a personality to work with NJHMFA, the other attorney, the agents, the home inspector, the appraisal, the title company, insurance company, also everybody involved in the transaction. And the job is to get to the closing table and get you closed. Now let's pretend you are closing tomorrow at 2 o'clock. Your attorney would have contacted you already today to tell you how much money you had to bring to closing. Your attorney would have also told you to conduct a walkthrough. That means simply to visit the property before closing. Why? You want to make sure there's no damage or hidden damage to the property. Think about it. If at the last minute you tried the HVAC today, in the last few days it's been 95 degrees. The heating and air conditioning worked on the day of home inspections, the day you signed the contract. But what if it didn't work today? You're closing tomorrow. That's your opportunity to figure out what happened. You could either get an estimate from an HVAC contractor, and let's say it could be fixed with adding Freon, $300-400, something that can be resolved, credit given, you close tomorrow. But what if it's something bigger? What if the HVAC just broke and it cannot be replaced? That's an expensive $3 to $4 grand possible repair. We're not closing tomorrow. We would delay the closing, figure it out, get estimates, and get the job done. What's the point of this? Do the walkthrough before the closing. There's vandalism, leaks, you want to know after closing. You don't want to call your attorney with these problems after closing because the new owner is you and it becomes your responsibility. Now, I'll save the best for last. I often find what I'm about to say is pretty helpful to most people. And one day I think they'll call me or email me, as I do get many emails of appreciation. Whenever you buy a property, the seller has to conduct 2 inspections or 1 inspection prior to you buying it. It's called the Certificate of Occupancy Inspection or Smoke Detector Certification. That means the seller calls the township, calls the fire department. If the smoke detectors work, they sign off on a certificate and they sign off on it and provide that smoke detector certification prior to closing. Some townships have what's called Certificate of Occupancy Inspection. That means a building department comes out, inspects the property. If everything passes, they sign off. If it fails, they tell you what failed. Then you have to fix it. The township comes back, re-inspects. If it passes, they sign off. The seller must provide these certificates to you when you close. Every town is different. Google up the town you're buying, call code enforcement in any township. For example, if you're buying it anywhere, it doesn't matter. For example, out there in Jersey City, a smoke detector certification is required. That means there's no certificate of occupancy inspection. It's just a smoke detector, no building inspection. For example, if you're buying in Edison, New Jersey, there's a smoke detector certification and a certificate of occupancy inspection. If you're buying in Franklin Township, New Jersey, it's just a smoke detector certification. So everybody follow the pattern. Every town, it's either or both. Just call the town and we'll tell you which one. And it's the seller who has to provide this to the buyer. Now, everybody try to hang with me on this last point. Let's assume you're out there and you signed a contract. Doesn't matter which town, make it up. And you found a contract, you found a house, and you say, I want this house. I love the finished basement I've seen. I can picture myself there, and I want to make an offer. I want to live there. 50% of the population may think the finished basement looks nice, but how do I know it's legal? Is it legal? The other 50% of the population may never give it a thought. Happy-go-lucky, do not inquire, do not even think about it. There's no judgment here. You think which group you're in. Let's assume you signed the contract. There's a finished basement and your attorney asks the other side, the sellers, is the basement legal? Let's assume in your township, the only certificate required is a smoke detector certificate, nothing else. That means the township inspects smoke detectors, it works, they sign off. Seller's attorney provides your attorney with the smoke detector certificate. That's the only thing required. Your attorney says, thank you. Now, the attorney has to determine on your side whether the smoke detector certificate is enough or is there other legal paperwork required. I can tell you if the attorney accepts only the smoke detector certificate, that's a mistake. That's not enough. I don't blame you, the buyer. You're thinking, well, that's the only certificate offered. I'm good to go. The attorney more experienced will block that and say, that's not enough. I need a copy of the permit, closed out permit for the finished basement. Let's assume option 1, the attorney doesn't do that, accepts the smoke detector certificate and closes. 3 years later, you are now selling your property and a new buyer enjoys and looks at your finished basement and wants to make an offer, just like you felt 3 years ago. Except this buyer says, can you tell me if the basement's legal? You then go to your closing file and provide the smoke detector certificate to them. Except this buyer is much more smarter than you and millions of people always are. And this buyer says that this certificate is not enough. Please provide me with a permit. And you're thinking, permit what? You call the township, you ask them, can I get paperwork on my finished basement? The township says there isn't any. We didn't know you had a finished basement. And in other words, they're trying to tell you that the basement was done illegally. Now, the buyer will tell you, I would like for you to fix this issue. To legitimize and legalize the basement, the townships may ask for architectural drawings, electrician certifications, plumbing certifications, and of course, legal fees are very expensive. You will argue that you did not create the basement. I did nothing wrong. I just enjoyed it. I got the smoke detector certificate and that's the end of it. You may use that defense that you didn't do anything wrong and you didn't do the basement, but that defense will work in third grade. That will not work today. The basement now is your responsibility to legitimize. After spending all this money, you'll be very aggravated and spending time, energy, and lots of money on fixing a basement that you didn't create. How can you solve this problem? There's two ways. It's generally, I always end the seminar by saying it's against my financial interest to give this advice to people out there, because I make a very good legal living on helping clients out there to solve these problems. Now, there's one way you can do this. You file what's called an Open Records Public Act form. It's a free form, Public Records Act form. Now, this is a free form, doesn't cost any money, and you do not have to be the seller to complete this form. Once you complete this form at the township, in 10 days by law, the township has to provide you with any information they may possess about your home. You can contact code enforcement, that's code enforcement in any town. You can go in person, and I'm sure with COVID, you can go online and fill out the form. Doesn't mean the township has any information, but whatever they do, they will share it with you. Now you can become a detective. If a seller says to you, I have a brand new water tank, brand new roof, brand new windows, brand new heating system, and you don't see the permits, that means legal signed off permission for these things, you learned something today in this seminar. You learned that you need to tell the seller to provide the proper paperwork. Why? Because after closing, it becomes your responsibility. You want to tell them on your watch that they should fix it. So when your home inspector says, I don't know if the hot water tank was done correctly, and you see no permits for it, you immediately want to engage through your attorney to have the seller address it. Very important. The last thing I would like to tell you is you should always, like the old-fashioned way, pick up a landline, cell phone, telephone, and call code enforcement. And you want to ask them one question. Are there any open permits? Just listen to the answer when you ask, are there any open permits? Why? As soon as they say something's open, you want to tell the seller to close it out because it's on their watch. If you wait after the closing, the new buyer will get a great education on fixing all these problems and you want to avoid it. Doing these two things will solve you a lot of money down the road, a lot of aggravation. Thank you for everybody for listening. I'm Satal J. Shah in Edison, New Jersey. We service all clients, Hudson County, you name it, doesn't matter, all 26 counties. We do a lot of work in Hudson County. We have associates and we travel and do the closings. If you have any questions, I know Cynthia's given our contact information and you're welcome to email me and set up a call to speak. We assist, like I said, in all the counties. I know Cynthia's provided our brochure, Attorney Shah's Guide to Buying Your First Home in Spanish and English. I'm proud to say we had 6.4 million web hits on that brochure on my website. It's been mentioned on national TV shows and media, and it's highly downloaded because I believe that it helps buyers understand what's to come and their first steps in buying a home. You can also follow us on Instagram at Shah, S-H-A-H, legal, L-E-G-A-L _C-O-M. That's Shah, L-E-G-A-L _C-O-M. And you can see our latest updates, affordable housing. And there's going to be a new seminar coming up on how to deal with as-is and contracts. So look us up on Instagram. I want to thank everybody else for listening. God bless everybody. And I wish everybody lots of success in this market. Thank you and good night.
Thank you, Satal. Such great information always. Appreciate you coming on.
Thank you.
Anyone have questions specific to Satal and what he was speaking of? I'll still address the other Q&As for Jesse, but I want to get any questions that you might have for Satal.
Yes, hi, good evening.
Hi.
I wanted to know that when you say an attorney, you have to hire an attorney when you're buying a home, and is that separate from the title company that you hire?
That's a very good question. To answer your question, first of all, this country does not require an attorney to do anything. That's up to the buyer to make an informed decision. There's no law that you have to hire an attorney. Now, hiring an attorney will help you because you're having an advocate and somebody to look out for you. That attorney is separate and apart from a title company. A lot of times, the buyers get misinformation. They are informed that all you may need is a title company. But just understand out there that when you hire a title company, their job is only to order title. That's it. The buyers learn a long lesson later when things go wrong in their closing afterwards and during closing. Title company has no legal responsibility to help you, advise you, or even tell you what to do. So when you close and you close with mistakes, the first thing somebody will say to you is, who was your attorney? And soon as you say, well, I didn't have one, that's going to be an issue on the buyer. So just be aware the title company has only one function. They do title work. They do not help you on home inspections. They do not do any legal work for the mortgage company or advise you on anything else legally. They don't have a right to do it, and they generally will not do it, just for your knowledge.
Also, how far in advance should you have an attorney on retainer, a real estate attorney on its retainer?
So the day before, well, not even on a retainer yet, but you should definitely speak to the attorney. I would say the day before you actually sign. You want to feel comfortable. You want to talk to the attorney and make sure you like them or you have a rapport or personality. But I would do it the day before you sign because the 3-day attorney review is strict. Your agent generally will tell you the day before you sign or 2 days. Like I had 4 clients call me today. They're signing contracts tomorrow. They called today. They said, are you available? We want to work with you. Why? Because they know that once the contract is signed, the 3-day attorney review starts. The contracts immediately have to go to an attorney. If you sign a contract and you waste 2 days and can't get a hold of an attorney or no one's calling you back, you're losing precious time. So if you're asking me as a suggestion would be you generally will talk to the attorney. I would think a day or 2 before you sign so you get the person ready. So as soon as it's signed, you're ready to go.
Great question.
I just had one more. I'm sorry. As far as even from, say you're purchasing a property from a government entity, say like a housing authority via any NEP program or any type of property like that?
Well, it sounds like, are these some type of affordable housing for purchase that have deed restrictions?
Yes, there's a program. I'm currently in the NEP program and it's coming to the entail of it. And so I was just wondering, as far as when you're interacting with a government entity, do you also, should you have an attorney represent you?
I mean, the general question out there you're asking is, I mean, like I said before, there's no fundamental right to have an attorney in this country. You do whatever you want. If you're asking as a suggestion to have an attorney, whether you're buying from a government entity, non-government entity, foreclosed property, distressed property, normal single family, normal condominium, normal townhouse, suggested that you do, because if you didn't have an attorney, you just have to ask yourself one simple question. When you buy a government entity property, how is the average person understanding what any of the legal language is? And how are they able to make any kind of decisions? That's where an attorney, I think, would be helpful.
Thank you.
To help with that, to cipher that and to really tell you to make the right moves. I think that's the value add of an attorney. The one last thing I will tell you, the value add of a good attorney, whoever that may be, is my motto is, and I think good attorneys will tell you this one motto, their job is to help you as a first-time buyer to prevent mistakes that often first-time buyers make. The best part of my job, I've been told, is that I am an attorney and I get paid to watch people make mistakes. Think about that. That means after year in and year out, I see smart people do smart things and I see smart people make mistakes. I learn more as an attorney when I see very smart people make mistakes. That means I'm getting paid to watch you make a mistake, but then a good attorney has to then prevent that mistake and help another client not make that mistake, if you're following what I'm saying. That's where the value really is
Right.
when it comes down to it. Just food for thought.
Thank you.
You're welcome.
Good point. Thanks for your questions. Does anyone else have questions for Satal? Nobody? All right. Well, thank you so much, Satal, for joining us today. We're going to touch on some of Jesse's Q&As. You're welcome to stay on. Or I
Yeah,
know
I'll be
you're
on.
coming in.
If anybody has questions, I'm still on, not a problem.
Okay, great. Thank you so much.
You got it.
All right, so Jesse, I'm gonna go back up. You said you were answering some of these questions. Did you get through them all?
Yeah, I only saw one other question that we didn't answer, and that was, I think it's, the name was Shonda, had a question about the proceeds and what's paid to the seller.
Oh, you know what? The other one came directly to me. I didn't realize it was also from Shonda. She was asking if you could go over, she didn't understand the 40-47 ratio. I think that was that with the first time home buyer.
The debt to
if
income
you could-
ratio.
Yeah, if you could explain that, and then also
sure.
the LTV 80%.
Okay, who was that? Just so I know.
That was also Shonda. That came directly to me. Sorry, I missed that one.
Shonda, the debt to income ratio, basically it's a calculation that the lender is going to use to determine your, if you can afford the mortgage with your gross monthly income. So the 40% represents 40% of your gross monthly income that just includes the mortgage, okay? And then the 47% represents the mortgage and all your debt, your minimum payment repayments that are you're required to pay each and every month that shows up on your credit report. So as long as your income, again, gross monthly income is within those parameters, no more than 40% of your gross monthly income for the mortgage, which includes your principal, taxes, interest, and insurance, and no more than 47%, which we call the back end, which includes that mortgage payment with the interest, taxes, and insurance, and your monthly payments that you have to make, your minimum monthly payments that you have to make on your that's showing on your credit report. And what was the second question?
Second question was where'd it go? The 80% LTV.
Again, loan to value basically is the easiest way to describe it is you're currently required to put down 3.5% on the house that you're looking to buy with this program. Now, if you can put down more than 20%, or you have 20% basically in funds sitting in an account or in a checking or a savings account, in essence, you don't need this down payment assistance money. That's what it's saying. So you can, in essence, put down more than 3.5%. You can put down 20%, 30%, 40%. These funds, this $10,000 is not for you. That's what they're basically saying. It's for folks that actually need the $10,000. So if you can put down more money, which means that your overall loan amount is going to be lower than 80%, then you're not going to qualify for our down payment assistance. I hope that makes sense to you.
Shonda, feel free to
Yes.
answer. Okay.
Yes.
Great.
Okay.
Okay. No, I get that. So with the 40 to 47%, is the 47% a total of everything? Like, is that the total? So basically
That's the
40
total of
for the
everything.
housing.
Yeah, that includes the anticipated mortgage payment, which has the principal, taxes, interest, and insurance, and your monthly debt that you have. So no more than 47% of your gross monthly income, all those things combined. So if you go over that 47%, then you could possibly qualify for the Homeward Bound, which allows for 50%.
Okay.
So you got options. If you don't qualify for one, you can possibly qualify for the other.
Okay, thank you.
You're welcome. It was a great question, though.
Great question. We have a question for Pedro. Pedro, I do not speak Spanish. I apologize, but we do have some staff at the agency that can translate it.
Satal speaks Spanish.
Oh, Satal speaks Spanish.
I believe.
Pedro was asking Jesse because he's looking to. He's wondering if he can apply for the down payment assistance program, but it looks like he's already got a letter of approved loan. So if it's not with our mortgage, then he wouldn't be able to couple it with the down
No, you
payment.
have to use one of our approved lenders. And if they're not on our list, Pedro, they can contact us and get approved for our list so you can take advantage of our down payment assistance.
And Pedro, I'm going to put, I have to pull it up on our website. We have the home buyer guide that's also in Spanish. So I'm going to put that link in there once I find it here. And that'll help you too. I didn't have any other questions in the chat. Did anyone else have questions?
Hello, I have another question as far as the NEP program that I'm in, or I believe I'm in. I will reach the 5-year mark the 31st of October, and I have yet to have any information as far as how much the property will cost or what the market rate of the rent will be. So I was trying to figure out, do I just on my own go through home ownership steps, or do I still wait for the housing authority to reach out?
The program that you're are you currently renting right now?
Yes, sir.
Okay, and this program is helping you to buy a affordable unit?
It's supposed to. What I was presented with by the housing authority was that they would offer me the option at the end of the 5 years to buy the house or pay market rent if I was not interested or did not qualify to buy the home.
But so I'm a little confused. So going into this program, is it initially a rental?
Yes,
with
sir.
the option to buy?
Yes, sir.
Okay. The issue that I believe you're going to have, Priscilla, is that that unit is what they call a deed restricted unit. So it only can be sold at a certain price. Our down payment assistance and mortgage program cannot be used for deed restricted programs. It has to be market rate property.
So is there a way to determine if it's market rate or not, or would that?
You have to reach out to them and find out. The simple question is it an affordable unit that's deed restricted? And contact them. They should simply be able to tell you yes or no.
Okay, and if they're not able to provide that information, I guess I just looked elsewhere for a property, correct?
Well, anytime it's deemed an affordable unit, not always, but in most cases, they have a deed restriction on it because the thought is that they want to keep it affordable in the event when you decide to sell or leave, so that the next person can come in and take advantage of that affordable unit. But you have to reach out to them and find out the specifics of that unit and what your options are. But for our program, it's for market rate units anywhere throughout the state of New Jersey that you can purchase.
Okay, I have another question as far as like, say there was say it was a duplex and I was interested in purchasing because I gathered some more information from listening to the seminar. Do you have, after the 5 years, do you have to, as far as the mortgage go, do you have to still remain in the property if you get certain mortgages? Because I might have been misinterpreting what I was reading, but certain mortgages, you had to be there for 30 years or something?
No, for our program, you're required to be there for 5 years. It has to be your primary residence for 5 years. If it's more than one unit, you have to occupy one of those units as your primary residence. After 5 years, you can do whatever you want. You can rent them out, you can refinance, you can sell, you can do whatever you want. But the restriction for the down payment assistance for our program is 5 years of residency in that particular home or that unit.
Okay, thank you.
You're welcome.
Sure. Any other questions? Feel free to unmute or put in the chat. Anyone else? Well, we shared a lot of information. I hope this was helpful to everyone. Like I said in the beginning, if you did in fact register, that means I have your email address and your name, and tomorrow you will get an email from us with all of these links that I had shared in the chat and the links that you saw Jesse show on his presentation. If for some reason someone had shared the Zoom link with you and you did not register and I don't have your email address, please chat that to me now and your name so I can make sure you get that email. In the chat, which also again is going to be on the email tomorrow, but just letting you know, I put a link to our website, which is showing our last two webinars that we're doing next week, next Tuesday and next Thursday. If you know anyone else that wants to join in, or if you have any more questions that you think of later and you want to come back, feel free. We have next Tuesday and next Thursday. And then that's the end of our webinar series for now. And then the other link was our YouTube channel is where we're putting all these recorded sessions. So we'll put this recorded webinar by end of day tomorrow. We'll be on our YouTube channel. And again, you'll get our email with all of this information for you. I hope this was helpful. If you have additional information or additional questions, please feel free to reach out to Jesse. You have his email address, and as well as Satal. And thank you, Jesse and Satal, for all the information today and for speaking. We really appreciate it. Thanks everyone for joining, and have a great night.
Thank you all.
Thank you. Good
Thank
night.
you. Thank
Thank you.
you.
Good night.
You're
Have a good
welcome.
night.
Have a great night.